Let's get the read from Scott Martin over at the CME. He's a very good read of these things. For now, Scott, it's the concern about things sort of slowing down that's dictating things, but obviously that could change. Where do you see things going?
I hope it changes, but it doesn't look like today, my friend. I mean,
right.
My goodness, look around. You've got gold prices, Neil, back up to where they were last week. Hey, friends, new low on the 10-year note as far as this drop goes to about 1.97 on 10-year U.S. government paper. That's pretty significant. So, yeah, Neil, I'll tell you, it does signify that dry up in demand, the dry up, let's say, in optimism that's out there now with regard to global growth. So, to me, oil prices, the yield, as I mentioned, on the 10-year note, gold prices are things to keep an eye on here as we kind of assess how earnings season is going to be in the U.S. that is just starting in a number of days, as well as, say, overall economic numbers that the Federal Reserve here is going to be watching over the next couple weeks as they prepare for their meeting later this month.
You know, it's interesting that the Federal Reserve's Tom Barker was on the wires talking about a chill in business investments because of the trade uncertainty. Then Prudential came along to say that, trade could blindside investors as earnings take it on the chin. I'm paraphrasing there. So part of this concern is built on the idea that tariffs are around for a while, but I thought the markets were happy that the Federal Reserve would presumably come to the rescue to deal with that.
I think they are. Now, how much the Fed really does, I guess, is the question. And does that offset those trade concerns? I will tell you, Neil, in talking to some business owners around town here, some public, some private, mind you, they were hoping that by now we'd have some sort of more construction in the deal. You know, I think it's one thing to say, yes, we're going to get a deal, but to not really know when and not have any visibility, kind of like we still don't have, still, I think, worries businesses. So what we're going to see is, yes, an impact on Q2 earnings, which is, again, starting in a matter of days, but also guidance, Neil. I think you got to watch company guidance going forward as it pertains to the tariffs, as it pertains to the difficulties they have in trade, and how that may affect future profits.
What do you think happens?
I think the market takes it a little bit rough, to be honest with you, because I think the market has baked itself a cake that it's eating that says that there's going to be a trade deal, if that makes any sense. And if we don't get one, say, or at least some real progress, some real measurable progress in the next few weeks, I think the market's going to start to worry. And yes, the Federal Reserve can come to the rescue and give us 25 basis point rate cut here at the end of July, but I think the market wants more. Again, with the 10-year down where it is, I think the market is expecting more than just one rate cut and more stimulus from the Fed.
Yeah, and if they don't get it, then what?
Then the market sells off, and then you see things like gold go up. You see things like bonds continue to rally, which we own. I'm happy to have those things, but I'll just tell you, be ready for equity volatility going forward if you're an individual investor playing at home.
All right. Thank you, my friend. Good catching up with you. Scott Martin, have a good 4th if I don't see you again.